Hey, you are listening to What the Sigma with Chad Stacks. Today on the show, SoftBank just bet the entire Japanese corporate house on OpenAI with a $40 billion bridge loan that's ticking down to zero. And we're talking about what happens when the world's biggest AI bet becomes a forced IPO deadline nobody saw coming. $32 billion in annual profit, and almost none of it is real money. That is the SoftBank story this week, and if you read the headlines and moved on, you got the version they wanted you to get. Record profit. Highest ever by a Japanese company. Masayoshi Son looking like a prophet again. What the coverage largely skipped is the mechanical reality underneath that number, which is that SoftBank's entire fiscal year profit is a mark-to-market gain on a single, illiquid, private position funded by a bridge loan that has a hard expiration date. And that expiration date is now the most important event on OpenAI's calendar, whether Sam Altman has acknowledged it publicly or not. Here is the actual structure. SoftBank reported a 5 trillion yen net profit, roughly $32 billion, for the fiscal year. That number is being compared to 1.15 trillion yen the prior year. So the framing is, profit nearly tripled, profit at record levels, historic achievement. Strip out the OpenAI position, and you have a holding company segment that lost 472.1 billion yen on the year, because gains from NVIDIA and Intel were more than offset by T-Mobile and Alibaba moving against them. You have a Q4 where Coupang, Didi, and Klarna all moved against the fund. The non-OpenAI book is not a portfolio in harvest mode. It is a portfolio bleeding into what should be its realization window. The OpenAI gain itself. Vision Fund 2 booked $42.1 billion of the roughly $45 to $46 billion total gain. Fair value of the OpenAI position at fiscal year-end sits at $79.6 billion against a cost basis of $34.6 billion deployed so far. That is a $45 billion unrealized gain on a private company with no public market, no disclosed revenue, no gross margin figures in any of the reporting, and a competitive set that includes Gemini and Claude, which CFO Yoshimitsu Goto described as, quote, a good thing for the industry. He said that while S&P had already moved SoftBank's outlook to negative, specifically citing OpenAI's competitive exposure, Goto is running two conversations simultaneously, and they are not compatible. Now here is the part that the profit headline completely obscures. To fund the $30 billion follow-on into OpenAI at a $730 billion pre-money valuation, SoftBank drew down a $40 billion bridge loan. The bridge is unsecured. It has a 12-month term. It was executed in late March. The syndicate is JP Morgan, Goldman, and 4 Japanese banks. Unsecured in 12-month on a $40 billion facility means the lenders are not underwriting SoftBank's balance sheet. They are underwriting an OpenAI IPO happening before that clock runs out, which puts the maturity somewhere around the first quarter of next year. SoftBank funded the entire first $10 billion tranche to OpenAI on April 1st by drawing exactly $10 billion from the bridge the same day. The second and third tranches are planned for July and October. Total commitment to OpenAI across all rounds is $64.6 billion, of which $34.6 billion is deployed and $30 billion is still in flight. So the $34.6 billion cost basis that multiple outlets cited as the full investment is actually just the amount already spent. The committed figure is nearly double that, and most of the reporting conflated the two. As of the earnings report, $20 billion had been drawn from the bridge and $2.5 billion had been repaid. The remaining drawn balance is sitting against a position that cannot be liquidated in any conventional sense because OpenAI is private. To fund the bet this far, SoftBank sold $16.2 billion of T-Mobile and $5.8 billion of NVIDIA during the year. The company monetized 2 of its most liquid, most appreciated public positions to concentrate further into a single private AI name. That is a specific choice with a specific risk profile. Here is what no one in the coverage is asking. SoftBank's net asset value, which hit 40.1 trillion yen at fiscal year end, and a pro forma 47.7 trillion yen as of mid-May, is marked largely on OpenAI's private valuation. That valuation was set at $730 billion pre-money by SoftBank's own follow-on investment. The entity setting the price and the entity whose balance sheet depends on that price are the same entity. The valuation is self-referential in a way that no source in this reporting cycle has interrogated directly. Goto also floated, in the earnings call, the idea of using the OpenAI stake as collateral for a margin loan. His exact words, "It's certainly possible we could use our OpenAI assets for financing in the form of a margin loan. How to make use of this 10 trillion yen asset is an exciting prospect." In the same set of disclosures, SoftBank cited a 3.5 trillion yen liquidity cushion sufficient for more than 2 years of bond redemptions. If the liquidity cushion is genuinely comfortable, you do not telegraph margin loans against your most concentrated and most illiquid position. Those two statements do not coexist without tension. The Archegos comparison is not hyperbole. If SoftBank pledges OpenAI shares as margin collateral, you have leverage stacked on a private mark with a valuation that is partly circular against a 12-month bridge that is already drawing down. The scale is larger than Archegos, and the position is less liquid. The difference is that Archegos blew up in days because the underlying names were public and the margin calls were immediate. A private stake margin facility does not have the same velocity, but the structural logic is the same. Concentrated, leveraged, illiquid, and dependent on a single outcome. That outcome is an OpenAI IPO, not as a nice-to-have, as the mechanical exit from the bridge. The bridge matures around the first quarter of next year. The July and October tranches have not been confirmed as bridge-funded or permanently financed. If they are also bridge-drawn, SoftBank will have deployed the full $30 billion follow-on through a single 12-month unsecured facility. The refinancing question at maturity is not a footnote. It is the entire thesis. Also not covered, SoftBank is a named partner in the Stargate infrastructure commitment, which Sam Altman announced at $500 billion. That is another capital call that does not appear on the balance sheet in any of the earnings disclosures, and no reporting in this cycle connects it to the existing OpenAI leverage structure. The Vision Fund track record matters here as context. WeWork was a private valuation driving parent-level earnings until it was not. The current OpenAI mark is structurally similar, a private position marked by the investor's own follow-on price, generating the headline profit number for the holding company. The difference, Sun would argue, is that OpenAI is real. Maybe, but the earnings report contains zero revenue, burn, or gross margin data for OpenAI itself, so that argument is being made on faith and competitive narrative, not disclosed unit economics. What this story actually means. The largest annual profit ever reported by a Japanese company is a non-cash gain on an illiquid position, and the financing structure around that position has created a hard deadline for OpenAI's public market debut. The IPO is no longer OpenAI's decision on OpenAI's timeline. The bridge loan made it SoftBank's decision on the bank's timeline. If the IPO slips or prices below the implied $730 billion pre-money, the collateral chain from ARM-backed financing through to any potential OpenAI margin loan starts to look very different than the pro forma NAV does today. Remember, nothing said in this podcast is financial advice. This has been another fire episode at What the Sigma. Smash that follow button and tap 5 stars to spread the butter. Fortune favors the bold, baby.
Grab news. Thomas.